Hello, traders. It's 8:01 a.m. Chicago time on the 17th of June, Wednesday. It is hump day. You are halfway through the week almost, at the end of the day, of course. Um, this is episode number 1778. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The short story is we still have risk on for today, not as massive as yesterday, but it's still risk on. The rollover is about 81% done, as close as I can get it, given the graph that CME provides. It shows 63%, I believe, for September, and the about 78%. 78% of the open interest rolls, so we're about at 81%. This means that starting today, we can start to lean on the volume delta and volume data overall. It still doesn't take us out of the fact that we are in rollover week or expiration week, and this Friday's quad witching. This combined with our buddy Jerome Powell is going to be testifying in front of the House at about 12 Eastern, and that's going to keep going. On the calendar today, there are several things. Well, let's not skip around. This morning, the leader is the Euro Stoxx 50. The Euro Stoxx 50 up 1.14%. The DAX follows. The Nasdaq's up 53 points or 0.53%. The S&P is up 11 points, is opening in range, in the prior day's range, almost in value, just above value, and the Dow's up 70 points. So as you can see here, we've got a slight risk appetite after a very bizarre trading day yesterday. Yesterday was a neutral day, and normally we'd have neutral normal, neutral extreme. This one, I don't know where it sits. It sits more like neutral normal. Events yesterday led to the market dropping very hard as a result of news, and that really disturbed a few things, disturbed the force. Crude oil is a laggard today. It's off 41 cents, trading at 37.97. We're still in July crude, the N0 contract down 47 cents, 1.22%. Gold is trading at $1,728.60, is off $8. So that's where we stand this morning in the calendar. Again, we did have a bunch of numbers come out of Europe this morning. Great Britain had its inflation rate year on year, came in at 0.5 as forecast. That was a 2 a.m. Inflation rate out of Canada year on year for May at 8:30 Eastern came in lower than expected. Inflation was expected at 0%. It came in at negative 0.4%. Slight deflation there. Housing starts also came in this morning. Housing starts came in a little bit soft. Building permits came in a little bit stronger. And then month on month, housing starts were way below forecast. Forecast was 17.8% for May, came in at 4.3. Building permits, however, came in stronger. Expected at 12.4%, came in at 14.4. At 10:30, we get crude oil inventories, gasoline stocks, and distillate stocks. You can find numbers online, and then again at noon we have noon Eastern, we have Fed's Chair Powell, my buddy Jeremy. It's really Jerome or Jay. And then we have Fed's Mester at the cash close at 4. And then we wrap up the day with the Australian employment numbers. That's what we're looking at for today. Nothing on the earnings calendar. Oracle already reported. I only track on my earnings calendar. I only track those stocks that generate $3 billion or more in revenue. Let's see, there's nobody left. So that's where we stand for today. Let's hop into our review segment. I want to start off by talking about a little bit about what I said yesterday. We were opening in the gap of a gap. This was a gap down, which follows a gap up earlier from the 5th. Okay, so we have two gaps, and we are uh, opening right in that gap. And as it says right here, this is an auto transcription. It's opening in that low volume node. This is likely to be very choppy this morning, and that was warning I gave early on that we are likely to open up with both sides being interested in the action. We're likely to open up in an open auction, but it's likely to be quite whippy. And basically, that's what we got. So let's move forward, move this scale forward to here. Oh, too far. I only gave one scenario, and that scenario was it's likely to be quite wide, quite choppy, but I am expecting the overnight high to be taken out. We had pushed the overnight high from the U.S. retail sales number onwards and came off, as I said yesterday, about 15 points before the open, and I expected a tag of that, but I expected it to fall back in and work through this low volume node. I expected a profile that had an excess at the top and an excess at the low, and fairly balanced for yesterday. And I was completely wrong because this is what happened yesterday. Well, I can't even show it on this. There were a lot of rotations yesterday. But what happened was we did have a whippy open, a relatively whippy open. In fact, I'd like to look at it on the trigger chart because it just gives us more detail. I'm going to turn off the stock zones for a minute because they are today's stock zones, not yesterday's. So let's go back in time. Here's the open. I'm going to expand it a little bit. Computer's kind of choked up. Again, I'm on my high-powered but has difficulty keeping up laptop because I'm running too many things and a 4K screen in addition to a 4K laptop screen and bookmap and browsers and all kinds of junk. So let's scroll back in time and look at this for a second. So here's the open. We open up at 41 and we push to 41.50 and we continue to drop. So, we're not able to test that opening swing high up here very well. We only do about a tick or two. And then we put in a low of the opening swing at 31.27, 41.50 to 27, pretty wide, pretty choppy. And it continues to just slosh around that mid. You see how it's crossing that mid, and it's the rotations are just all over the place, all over the place. And then we finally poke out through the IB high, and it looks like we are about to take off and follow scenario one and go, execute along towards the a run towards the overnight high. And what happens is right here, this news comes out and it immediately drops. Beijing's closing schools, Beijing's canceling flights, a corona resurgence. Corona numbers come out of Florida, a spike in Florida, Texas, Oklahoma, and Austin. And the market doesn't like that information at all. And as that continues to digest and more corona news comes in, it just drops. And we filled the gap, which is quite amazing because this gap fill was somewhere in the 8.9% historical probability. Pretty low historical probability to fill a gap zone this size. But it did go in there and it tags the prior day's close to the tick. So as it's driving down here, normally in the auction we would say well, okay, the higher time frame is now in control. You want to lay off of day type levels, right? So when a higher time frame is in play, they couldn't give two craps about your prior day high, day close, day point of control, day value. Doesn't matter. These guys are looking at things and their trades are looking out 30, 40, 50, 100 points, they're not interested in the day type levels. And as it approaches the prior day's high, it really slows down. It slows down and it kind of fails through. And then what does it do? It pokes the prior day's close, it gets to within two ticks of the prior day's close, and then we get this big, what was at this point the largest up rotation of the day. So now we have an impulse up, and that's when I put out a caution shorts to convergent members. I put out a caution shorts that hey, this is likely to start squeezing higher, and it comes all the way back through the mid. So the mid test here is pretty weak. Comes all the way back uh, through the mid, goes back up to the VWAP, and as we walk this thing forward, the VWAP becomes a tangled place, doesn't quite make the IB, and then finally pokes through the IB, and it just trades kind of sideways in that range. I got to tell you, it was very difficult to read. I didn't find it. This is a good scalping market, really good scalping market in my opinion. Not a good structured position market because it really was kind of um, exaggerating the moves. It just seemed like it wasn't really paying attention to the normal kind of rotations and tests. We even left the overnight high and the overnight low stat, the overnight stat, we left that open for the session. So we ended up with a neutral day with a big tail on the downside on a neutral normal-ish close, and amazingly, despite the big move down, we end up with a value area that's actually valid. We have a Gaussian value area. We have a clear neckline at the low volume node. On the low volume node, we have a very clear neckline here in the 3128 area, and then we have a clear neckline low volume node below, and it's just so this is a valid value area for those who trade value. Pay attention to that today. And here we are. We're currently trading right here at 3128.25. 3128.25. Very odd behavior is my point. I'm emphasizing it because it just seemed like the market is a little bit I don't know if the term is schizophrenic or something or bipolar or something. It was the market's very, very on edge. It wants those higher prices really badly, but it at the same time it is very nervous, very, very nervous on its way up. The overnight session opens right back up where we closed. A nice opening swing, tests down, tests up, puts in a lower low, lower high. We expect this to start to explore lower. We did leave a nice tail behind. You could see in the profile yesterday, you could see this is an excess low here. We left a nice tail, and my expectation is it would continue to test down as I looked at this last night. I would expect it, my bet would have been on that it would continue lower. But once the Europeans came in right in here in this bar, some good news, good numbers, and it started to push up and it held the mid here, and we are holding steady with the VWAP mid in the same spot. In the same spot with the point of control a little bit higher and what is a skewed upwards profile. A skewed upwards profile. It doesn't look like it's done to the upside for today. A very compressed trade compared to the prior session on pretty good volume, 398,000. As I said, The September contract has done most of its role, and then today we're going to get a little more news from Jerome Powell's testimony, from the Fed's chair of testimony, but we're also getting um, uh, the chief, the commerce, is it the commerce secretary or the chief trade negotiator for the Trump administration, Robert Lighthizer, is going to be talking to the House Ways and Means Committee about China and the trade kind of dispute, and so we may see more news out of that. It seems like the Trump administration is looking to start a fight back up there. I know it's good for elections and so on to fight. And so we may see that affecting today's trading. So that's the overnight session. Let's take a quick look at the order flow. The order flow is just a complete mess overnight. It's swinging pretty wide. You could see that in the middle of these swings, there's just nothing here. There's no real liquidity standing in a way. And we do have liquidity at the extremes. I'm seeing more liquidity to the buy sellers on the top than the bottom. And the market is in a stance, if it holds this 3120 area, the market is in a stance where it looks like it may start to shift up and work itself up to that 3153 to 55 liquidity above. That's the big piece. Remember the overnight high is 3147. 3147. It's squished in here somewhere. So I'm not really going to pay attention to the liquidity created here, but 31.55, 53 to 55 looks like it may be stable. Down below, as you can see, there's really not all that much. I mean, liquidity that comes in after a high or a low are just bids or offers that front run that lower high, and they're not really giving me all that much information. It's virgin liquidity in the book that is more important. This brings us above yesterday's overnight high and starts us working towards 3160. That's how things are set up. There's not much we can glean from the order flow in this session's Globex session. So not going to spend much time on that. Let's take a look at what we're expecting for today. But first, of course, edge clear. So for today, I'm looking at, okay, there you go. I'm looking at a market that's opening in range on the edge of value. The expectation in this kind of situation is it's likely to stay tangled here in this 31.2850 stock zone. I'm expecting it to push up, consolidate, potentially pull back, but I'm looking for it to squeeze that 42, work its way to the overnight high, hold at the stock zone at the overnight high, and then attempt to make a 3160 push before it breaks. This is an up bias setup. The market has clearly rejected. As I said, we have an excess low here. We have an excess low from yesterday. The market has tested the prior range. The gap is closed. We've tested the prior range, and we are still participating in this gap up here. So if I show you from the non-farm payrolls release that Friday, we ended up gapping up all the way up to 31.58 or something like that. And I expect us to continue to fill that on-auction gap all the way up. 31.60 is on the edge of that. So I'm expecting it to push higher. As you can see, this block here fills in where the gap was, and we're in that zone. We are not accepting lower prices, and this is where this primary scenario comes from. It just keeps rejecting lower prices. The secondary is an open auction that might get tangled in the overnight point of control. The overnight point of control tends to get tested approximately 80% of the days. Historically, gets touched at some point in the session, 80% of all days historically. But then we start to do the value area trade. So back to the close, back to the point of control, back to value low. This way, the key low volume node holds, and if that key volume low volume node holds at 3130 or 30-ish, if that holds and we start to rotate below, I'm looking short, and the key target becomes the prior day's point of control. The prior day's point of control is 3107, and in that case, I'm looking for the overnight low and potentially a test of the other extreme, which is the value low and potentially the low volume node below, the key low volume node below. That would be scenario 2. So the question is, how does it treat this key low volume node here? Does it hold and turn over and push lower? Does it hold, turn over, and then start to push through it? If it starts to push through, I'm looking to buy a pullback. So right here, buy a pullback, scale out ahead of the prior day's high. The overnight high touch is likely, so one tick below the overnight high, and then look for 3160 for the hold. Okay, that's not a trade recommendation. I'm just sharing with you how I'm seeing the markets. So this is where we are, open in range, potentially in value. And so look for the value range trade. And that's it. That's all I've got for you. I'm going to leave you with that. Good luck today. I need to go and do my crude levels, which are way late for the convergent crowd. Good luck, and I'll catch you tomorrow morning. Take care.